Yo, 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 what's up, guys? Welcome back to TWE Charts. Awesome. All right, we're going to be talking about the option chain today, and I'm going to be covering and updating the video yesterday, right? This very important retest on AMC. Before I get started, guys, make sure you like and subscribe if you want to see more content. And also, a little bit of a recap here on the most recent POI, right? Point of interest here. So I want to showcase here on the Discord how the alerts are formulated, how they work. So on the 31st, prior to this move, okay, AMC micro POI, high risk, $6 call expiring the 21st, was alerted. Okay, and you can see right now the price did indeed end up going up and following the macro projection. The macro projection, guys, is on this picture here. You can see if we zoom in, it looks a little bit like this, right? So we have the projector pattern. We have the $6.5 range being tracked as a projection for the price. You can see the target down here is 123. And that did end up playing out. So that was pretty cool. We have ourselves a match here, right? Now, the Discord functions like that, okay? A lot of these plays that are formulated are using a pattern and cycle analysis approach. Okay, so it's a little bit different from, just using technical analysis. And also, I focus a lot on the option chain, what the option chain is doing. I'll talk a little bit more about what that means for AMC here in the coming days. But if you guys do want to check this out, you want more info, check out Ko-Fi, and the link is down below. All right, you guys can also pay what you want to get in there and get on started. I also have a new feature. It's called Platzi. Pretty cool. And it's part of the reason that I find a lot of these, reference patterns. Platzi is a tool that it's a pattern recognition tool that finds similar patterns. And, when you have a bunch of patterns doing the same thing over and over again, these algorithms just repeating these sequences, those are really good to use for potential, price discovery, right? Okay, so all that good stuff is on the Discord if you guys want to check it out. All right, cool. Okay, so AMC on this retest, man, this very important retest here. Okay, yesterday I had two scenarios that I overlaid, right? I didn't have a bearish one because I don't think AMC is going to come down, okay, based on everything we've been talking about here. But this most recent retest is very early still. I think that in the next few days we're going to find out whether AMC is going to fake out or whether it's just going to turn around here and start climbing up, right? Here are both projections. So we have the fake out that's still at play. And then we have this one. Now, this one did have a no retest because I personally think that the third retest is a little bit too predictable, right? It's pretty much the first retest following what makes a support trend line, right? Because the support trend line is from the maximum low you can find to the next support. That's what makes the support trend line. So this would be pretty much the first to either establish an uptrend or not, right? And typically the way it works in the algorithm, and as we've seen time and time again, is that these guys love to fake out on these just basic technical analysis patterns. And that's why we have a very sort of different way to look at the way that some of these patterns play out. For example, the projector, right? A lot of people are going to tell you that this is, a flag that broke up or some kind of wedge or maybe a cup. But a lot of these patterns we see over and over again in a different way, in a different manner. And they typically do end up projecting what we call this point of interest, this POI, which is whether the price starts to climb up very quickly or it starts to drop very quickly, these macro POIs. And right now, this projector still holds. It's still looking good. But I think it's a little bit too early to tell whether the price is going to fake out or not. So we'll see here in the next few days. We also have and just crossed support here at 460. And there is a gap. So that's another thing to track in case the price does come down. They could fully cross, fill the gap, and then still have that fake out that not only fills the gap, but also comes down and retests descending support, which would give us the wedge that we talked about, right? This broadening wedge. So that's still at play. I think that's probably what's going to end up happening here. But it just, again, it just kind of goes with this whole, the way that the algorithms kind of slow down and speed up. It's very important, guys. Like, these guys will do everything in their power to suppress price action and do it their ways because they got the liquidity for it. All right. So a few things, guys, with options here. Okay, options are very important. We do have a major expiration date coming up here, the 21st. Okay. Quad witching curve. Now, the original projection has us going to about 12, but the macro trajectory, as long as it's bullish, and I've been saying this every video, as long as it holds up, as long as it's higher than this 450 range, the macro trajectory will still be bullish from there. So it doesn't matter if it only goes up to, 6. The macro trajectory is going to be pointing up, and that's a very important metric. So that's something I'm tracking here. We'll find out by the 21st what's going to happen here. But one of the things that we need to understand that these market makers end up doing is, well, on this quad witching sort of blueprint that we have here, right? The way that the cycle works, and I'm going to try and be as simple as I can with this explanation, but in the markets, one of the first, in the early days, right, November 2021, one of the things that I used to find this reoccurring cycle in the markets was something called the fast Fourier transform, which basically takes a sequence, right? It could be any sequence like this, and it dissects that sequence, so it gives us a nice curve by giving us multiple versions, multiple sequences that all line up in some form of way. Like, each dissected sequence will give us a match, will give us a pretty much one of these dots that you're looking at. And with this sequence, what we can then do is spot where there is error in the cycle, where there is error. And that's kind of what this hedging process is, if you think about it. If they have a curve in place, if this is their curve, all they have to do is pump liquidity, dump it back down to a favorable spot for them to be winning. And this is why options are very important, because they give them maximum leverage pretty much. And if they're able to pump it and dump it by a certain date, for example, here's a standard option expiration date, guys, right here. Okay? May 17th. What happens? Look at this trajectory. What happens to the price? It goes up 35% from the last standard date. So in a month, it goes up 36%. But what actually happened to the price? It went up almost 400% from the bottom, right? So these are the errors that they take into account, if you will. Like, these are the things they pay attention to the most, and this is why these are very important, these expiration dates, because when it comes down to it, guys, if the liquidity is not done here and they're waiting for this major expiration date to bring it up and then bring it back down to a range, they're going to do that. And this is just a projection based on what I know many stocks do, specifically, Carvana we've been tracking for a little while, and how they bring it up, they bring it back down. But it can play out in any ways. This is why I keep saying it's important that this trajectory points up, but doesn't necessarily have to come up to $12, right? It can go up to $6, and then on the next turn, it can start climbing back up from there. So all that still holds. I haven't changed my my mind on that. I do think that the current setup here is going to tell us a lot, especially if we start climbing up here in the next few days. But yeah, guys, I mean, everything still holds. This is looking good. I don't want AMC to fall below this trend line. I think that this trend line is very important to track here. If it does start falling below that 375 range and it stays there for more than 2 days, then we start to get into that sort of, we call it a theta period, where the markets, well, if they break support for a while, you're likely to experience a long theta channel. Pretty much any contracts that are out of the money here get crushed, right? We call it a theta channel. I don't think this is going to happen. Again, like based on the current events, based on the market outlook, all that stuff is very important. I personally don't see that happening. Worst case scenario, again, we go back to this first projection here, which is a fake out, would happen very quickly. Otherwise, the price, starts climbing back up in this range, which would also be ideal. All right. So again, if you guys want more info in the way that options work, check out the Discord, man. It's in the link below. Get on in there and check it out. Other than that, guys, we're going to be updating AMC as it starts to build this hopefully macro bullish pattern. And that's what I'm hoping for, man. All right. I'll see you guys on the next stream. Have a great rest of your Monday, man. Bye-bye.